Now there's this expectation that in November we may not see a rate decrease. December we probably will. But then next year, there's still this lingering question of like how far can rates actually come down?
The leaves are changing, and so is the real estate market. Just like always, we're here to break down last month's numbers with our market snapshot. Don't forget to hit that subscribe button to follow us every single month. So, Ruben, like always, we're going to talk about a couple of things. What today are we going to discuss?
So we're going to talk about the NAR numbers that just came out, and we're going to talk a little bit about mortgage rates.
Well, and it is that season for folks to be thinking about how they're going to plan out the next year. So what is NAR telling us right now about how this year is going to end?
Well, September was a slow month. We saw sales drop down to 3.84 million, which is one of the lowest rates we've seen really in the last 20, even almost 30 years. Prices slowed down quite a bit as well. They were only about 3%. But on the plus side, we're seeing more inventory coming on the market, which over time is going to, pay dividends as there's just more availability for transactions moving forward.
Right.
Q4 is going to be interesting with all the things the Fed is doing and the way rates are kind of bouncing around right now.
Yeah. And I know we'll get into rates again a little more deeply, but were there any other numbers that came out from the National Association of Realtors this last month that were interesting to point out to our viewers?
If you look at inventory, it's up like 25%. Like that's
a good number.
Substantial. It's good. Yeah. We're at 4.3 months. It's the highest it's been in quite a while. And I think it's going to keep trending up as we go into next year. So far, that's kind of the most interesting number I think we have is that, this inventory situation's finally starting to resolve itself a bit.
Sure.
On the downside, a little bit of that is obviously because the pace of sales is slowing down, right?
Yeah. Right now, it's helping us build up the inventory or the supply, which in most situations, economic-wise, right, supply and demand should help us navigate these high increases in our pricing, but it's still going up. Is that right? We're still seeing prices increase, even if it's just a little.
Yeah, they're still up about 3% year over year. Yeah. So to some extent, that slowdown's welcome. Obviously, it's an adjustment for sellers. But in general, that's kind of the story right now is we're building up some inventory. Prices are starting to slow down. And it's kind of setting us up so that when rates start to slowly come down, the inventory's there and the pricing's, there's been a little bit of relief, or at least not any more sustained appreciation really taken away from affordability.
Yeah.
The hope is that we eventually will start to see that downward trend and mortgage rates start to show up as, the Fed becomes more clear on what we're going to be looking at going forward in terms of monetary policy as affordability kind of levels off and hopefully starts to improve next year with prices slowing down.
Yeah.
So that's kind of what we're waiting for right now. Mortgage rates is kind of a confusing story right now though, right?
Yes. Yeah. So what is going on with mortgage rates? Because they seem to have gone back up again, at least today, right? They're closer to about 7% again.
Yeah, that's right. So in September, right around the time of the Fed announcement, we saw mortgage rates dip down to about, between 6.1 and 6.2%. They came up to about 6.5, stayed there for a while. And then recently now they've started rising a little bit back again, and they even hit potentially 7% today. So what's going on?
Yeah.
This all has to do with long-term views about the economy, monetary policy, how far rates can actually come down and still support, inflation that's in line with the Fed's targets.
Right.
So we got quite a few good reports about the economy.
We did.
And that's
positive.
Actually what's kind of driving up interest rates.
That seems so crazy, Ruben. But I think I remember you saying something along the lines of this really was baked in already. There was some relief in our mortgage rates the last couple of months, just baked into the fact that the market anticipated that we were going to get good news. And that the market also anticipated that we wouldn't see a huge spike in sales anytime soon. So it's just sort of following what they expected, even though the general public, I think, was expecting something else. Is that fair to say?
Yeah. Most projections, if anything, have actually deteriorated a little bit in terms of like where we're going to end this year, what next year is going to look like as rates have kind of played out a little bit slower to come down than anticipated. But,
sure.
We had an unemployment report where unemployment actually improved a little bit. We had an inflation report where inflation was still generally at a good level, but didn't come down as quickly as was expected in that report. So just a couple of things. It's like basically makes the Fed kind of take their foot off the pedal a little bit with, dropping rates.
Right.
So, now there's this expectation that in November we may not see a rate decrease. December we probably will. But then next year, there's still this lingering question of like, how far can rates actually come down?
Right.
I was looking at the MBA, the Mortgage Bankers Association's projections that came out today, and they actually have the 30-year mortgage rate staying at essentially 5.9% for all of 2025.
Wow.
So, that's a bit of a departure from where we'd seen things coming down closer to, 5.6, 5.7 by the end of next year, meaning that, a lot of forecasters are starting to expect that, rates are going to be a little more sticky than we thought on the way down. It may take, a couple more years over time. When we look at this stretching rates back, looking at what happens when the Fed lowers rates, going back to the 90s or even the early 2000s when we've had other kind of what we call monetary easing cycles, you see that it takes, a couple of years for mortgage rates to catch up with what the Fed's doing. So you don't see that one-to-one movement. It takes time. And typically these rate cycles are going to take 1, 2, even 3 years to go from like peak rates to, whatever floor they end up settling at. So we don't necessarily know what we're going to see. We just know that over time rates should come down as the Fed lowers rates.
Yeah. But to your point, and I know we've showed this graphic before, but in case people haven't seen it, the average over time is kind of right in what the Mortgage Bankers Association is saying, right? We didn't expect in general, outside of the last decade, to see mortgage rates that were in the 3s or the 4s. And they probably never should have been as low as they were for as long as they were. And expecting that to go back doesn't sound like that's what we're going to get.
Yeah, I mean, it's a lot of like legitimate uncertainty. There's debate, not just in the real estate community, but in the economics community of like, where is the floor for mortgage rates? Like, where's the neutral rate going forward where things kind of settle out and inflation's where they want it, unemployment's at a good rate. It could be higher than it was back then. Like we could be looking at where mortgage rates are just going to sit somewhere between 5 and 6%. That's not off the table.
Yeah.
It's not impossible that we get lower rates than that. But we really don't know until we get there.
Yeah. So the other thing I hear from you, Ruben, and this has been a consistent conversation that we've had, is nothing is going to change overnight. So when I think about how I would interpret this, either as a buyer, a seller, or a real estate professional in today's environment, I think about a couple of things. Number one, I think about a book that Gary wrote called Shift. And in Shift number 7 and number 8, he specifically talks about pricing your home right to sell. And basically, it all comes down to a price war or a beauty pageant. And what Gary was saying in those words is that sellers right now have to be very cautious about how they price their home in order to get it sold. And they also have to be very clear on the expectations of the buyer pool that exists today. And when we are starting to see inventory creep up, but not as many buyers coming into the market, that information is going to be really key. So if I'm thinking about buying, selling, or working with someone as a real estate professional, I'm going to be thinking really thoughtfully on what kind of home am I going to present if I'm selling? And if I'm buying, I get to be a little pickier. And so sometimes I think people are waiting for this magic to happen in these mortgage rates coming down to 3 or 4% again. And you just said that's not likely, especially not in the next year. So what else can they do today? And that's really, it comes down to the math. I think our professionals need to be sitting down with their clients and saying, this is what the math looks like. This is what your mortgage rate will get you. And here's the type of property that you can afford with today's rates. And you can be extra picky because there's lots of inventory. And so there might be more things you can negotiate on. And why not? Let's talk about it.
Yeah, exactly. I think it's, a time period where consumers in general are just having to adjust to the new reality of where mortgage rates are, where interest rates on a lot of things are in general going forward. So it's not going to change overnight. It's good to, educate yourself, know where you stand, know what your options are.
Yeah.
And obviously our, real estate agents are a great source of information for that when it comes to housing.
Yeah, absolutely. And I think the last thing to talk about today is, of course, we're going into a month that means gratitude for a lot of folks. And I have a lot of gratitude for being here with you every month, Ruben, and talking to our folks, and for being in a place where we have the opportunity to talk about this and buy a home and vote and all the fun things. So as we get into the holidays and we all get to be grateful about being with each other and experiencing a lot of the things that we're going to be celebrating in the next few months, I just want to say that I'm grateful to be here with you.
Yeah, I'm grateful for you too as well, Jen. And, housing's on the ballot right now. Go educate yourself, read the policies the candidates have put out, and go exercise your right to vote if you're watching this, before the election happens.
That's right. And of course, the next time we get together, we will talk about how that election went and what it means for you. So don't miss out. Be sure to hit that subscribe button so you don't miss a moment of the next Market Snapshot.